Which season is your favorite time of year? Is it summer when the sun's rays are shining bright? Or maybe it's autumn when falling leaves create a symphony of colors? Well, growth investors have a favorite season too, just not one you'll see featured in a pinup calendar. It's earnings season, when publicly traded companies report their financial results each quarter. It's a key driver of a growth stock's performance, and there are three key components to consider: a company's earnings report, its earnings estimates, and its earnings forecast. So, let's unpack each one. We begin with the earnings report. Just what is that exactly? Well, it's an account of how a company's business performed during the past fiscal quarter. An earnings report contains three important financial statements: the income statement, which details revenues and expenses, the balance sheet, which shows assets, liabilities, and shareholder equity, and the cash flow statement, which outlines the cash coming into and moving out of the company. We'll get into more detail about how to read each one in our course on fundamental analysis. But for now, just know that each statement offers insight into the health and progress of the company. Generally, investors want to see signs that a business is gaining traction in the market. Indicators like rising revenue, positive cash flow, and ideally, increasing profit. Or at least narrowing losses for companies that aren't yet profitable. When these encouraging signs are present, a stock will typically rise. And when these signs are absent, it will usually fall. This is generally true of all stocks, but it's amplified with growth stocks. Recall that investors generally buy growth stocks at a relatively expensive price today for earnings a company is expected to produce in the future. So they tend to react sharply to good earnings reports that suggest a company is ahead of schedule, and bad earnings reports that hint it's falling behind. Now, there's an important wrinkle to all of this that we need to discuss, and that brings us to our second item: earnings estimates. How investors react to earnings often boils down to how they expected the company to perform. Many investment banks have stock analysts who research companies and provide estimates of what their revenues and earnings will be before they publish results. These estimates are combined into an average or consensus, which acts as a guide for investors. So the price of a stock will sometimes reflect those expectations ahead of its reporting date. Sometimes a company will post earnings that are an improvement from last time, but the stock will fall. That's because the company may not have improved quite as much as the consensus anticipated. Similarly, you might see a stock rise after a weak earnings report if it wasn't quite as poor as expected. Go figure, right? That's why investors often read into what the expectations are for a stock heading into earnings season. That way, they can try to gauge whether the stock will rise or fall on earnings day. The third component to an earnings report is the company's future earnings forecast, or forward guidance. In this section, the management team explains how they see the business shaping up over the next fiscal quarter, year, and occasionally beyond. They'll usually offer commentary on product developments, sales growth initiatives, and trends in their industry and broader economy that may impact the company and its customers. Sometimes, the company will also provide estimates for its revenue, earnings, and other key metrics. Investors and analysts use this information to set expectations for the company in the months ahead. Sometimes, growth stocks see their price swing more on the earnings forecast than the quarterly earnings themselves. Again, that's because growth investors focus more on future earnings potential than backward-looking results. So it can be worthwhile to read management's commentary to help stay ahead of the curve. Okay, that's a brief rundown of why earnings season is so important to growth stocks. All this information can help you make an informed decision about your investment choices. Of course, there's so much more we could dig into about earnings. So if you have questions, make sure to join a masterclass so you can ask our team of instructors. And make sure to check out our lesson on researching stocks in WebBroker for more details.